Welcome, guys. Like I said, September is not done with us. Historically, the worst month for Bitcoin, but we are about to end it in the green. Actually, way in the green. But we are sitting a little bit lower right now versus yesterday, right around $64,000. And I do have a good explanation for it, even though it may not make a lot of sense. What is the explanation? Well, the US market is starting out a little bit in the red, okay? And Europe is a little bit in the red. And that's because Japan closed at almost minus 5%. I don't know if you guys realize minus 5% for an entire market is enormously horrible. It's really, really bad. So I do think it's just, it's just the tailwinds of that from Asia to Europe, now in the US, and we're seeing effects of that. But, it's like you look and you don't see anyone talk about it. Like, why did Japan just all of a sudden fall 5% today? Why did it dump everything? Is it because of the end of September? Is it because of the start of October? No, it's because their party, the LDP, the Liberal Democratic Party, decided to change their leader because they were fed up with their old leader and they're fed up with their policies and deflation and everything, and they decided to elect a new leader. And the new leader decided to call for a snap election rather than wait a full year for the people to vote. He decided to announce a snap election for next month. So that means there's a lot of disarray and turmoil, and a whole lot of people are really scared about what's going to happen within this next month. So that's exactly what happened in Japan. I don't know how things actually work over there. But that's exactly what happened, right? So that's why Japanese market completely crashed. And again, like I said, we're seeing the tailwinds of that, right? This has nothing to do with the carry trade situation, although that could still be a thing. Their central bank governor said that they can still raise their rate if necessary to balance their yen, but that's not what happened today. It's because of this thing, and this thing can continue on for a while, or maybe it could get better. I don't know anything about this new guy, but we do know that the Japanese economy is very different than all other economies. Rather than cut rates, they're the only ones looking to raise rates at this point. So yeah, that's what happened. But I don't want to just scare you guys with Japan, because right next to them, another country, which I've been talking a lot about recently, China, they had their best day in history. Their exchange went up 22%, the largest single day gain in their history, right? And that's because I mentioned yesterday's video, Sunday Walk video, and the cruise video, and last week, their government is starting to inject liquidity, kind of like ours, right? And when you have two of the biggest economies on the planet, and Japan's up there, they're not like they're nobodies. But when you have the two biggest starting to inject liquidity into their economies, that's a big deal, and that will trickle down, right? But I think today is a anomaly because of what happened in Japan, right? And plus, it's the last day of September, so maybe that has something to do with it. But yeah, so in case you guys are wondering, like, oh, why do we go down? This thing with Japan is just really weird. I think people don't realize what a minus 5% day would be. If that happened in the US, if we had a minus 5% day, okay, that's equivalent of the Dow falling 2,000 something points in a single day. I mean, that's how, horrific it would be, right? So just to put things into context. Again, I think it's an anomaly. We'll get past it. In fact, look at NASDAQ is starting to turn into green again. So we may be just getting past it today. Moving past that, what's happening in the U.S.? All right, I mentioned China is doing a lot of liquidity injections. Are we going to have the same thing in the U.S.? Are we going to have major liquidity injections? I believe so. We're going to do it in a different way, a slower way, but nevertheless, we're going to do it. Look at how many people are talking today or this week. I mean, you have 2 people talking today, including the main guy himself, Fed Chair Powell, and then look at everyone else. There's just, I don't know why there's so many people that need to talk about this thing, okay? There only needs to be one, and that's the main guy, Fed Chair Powell. But they're going to talk about, again, how the economy is and so forth, right? This week is important because we have manufacturing data and labor report. Those 2 things are absolutely crucial. We do have inflation numbers that show that inflation's going down, which is great. That's one part of it. There's 2 things that he's looking for: inflation and, I guess, jobs, right? Actually, 3 things: jobs, inflation, and economic activity, basically, those 3 things. So you got inflation going down, which is great. Jobs probably going down, which we will see. As long as it doesn't collapse this week, then we'll be okay. And then we got like economic activity, which includes like manufacturing, which is very important. I'll show you why. And all these things basically affect his decision on the next cut and all future cuts, right? Which is coming in November. We have to wait a full month for that to happen. But as it stands right now, it's a really good chance to have another 50 basis point cut. So this is how the U.S. is going to inject a lot of liquidity into the space by just cutting our rates. By cutting the Fed fund rate, that does a lot. It cuts the prime rate. It cuts the mortgage rates, essentially. It cuts the 10-year bond rate. It cuts every rate that is dependent on these rates. And that means businesses will start borrowing more money. Banks will start lending out more money. And consumers will start borrowing more money. And, it's a cycle, basically, of money being lent out. And not only that, there is money actually being printed too, being given out as well. That's part of this. So bottom line is, this is our way to inject capital and to have a full point cut. And this is not it too. And we still have December after that. In December, there's another chance. I mean, if you're looking at this, there's another chance of at least a 25 basis point and a 20% chance of another 50 basis point to cut over 1% within a matter of months, and maybe even 1.25 or 1.5%. That's huge. That would be probably the fastest cut in history. So that's our equivalency of capital injection, and that would be great. Great for markets. Whenever you see that, it's awesome for markets, and I'm looking forward to it.